Right, guys. Today is January 21st, 2023. We're looking at EU, Euro, US dollar. We have had some mitigations as expected, and we're initiating prices away. So let's look at this initiation away from here first. And this is our sells, right? Now, a term you'll see me use a lot is deep mitigation. At the moment, I'm using that terminology a lot. I'm studying it a lot, and it's very informative. What it means is it's the location of the mitigation, and that means something. And really, what are we talking about? Let's say we've got this range, and we initiate away. This becomes our order block, right? What happens between the A to B? In here, we've got an A, we've got a B, and a C. The A move to the B move, the low to the high is what creates that range, and from B to C is what happened between the, I guess, the last moments in that order block. And so as we initiate away from here's our A, here's our B, and as we initiate away, creating that C leg, we oftentimes will create order blocks. There's the breaking structure, so here becomes the C point, and so as you can see here, we've got an order block. Now, what does that order block represent? Typically, they'll create multiple of them. I'm most interested in the very first one, or the one that creates the highest point, because sometimes they'll make them primary ranges in here, meaning that they've taken liquidity. And so they can actually be a little bit like this. Whoop, whoop, right? So this becomes the range rather than this little guy in here. So this becomes the range. And if this is the range, we can still play on that. What does it represent though when we take the liquidity? So let's say we come back up and we take the liquidity. Excuse me, I went too far there on the old mouse. And we stop right here and initiate away. What does that mean? Deep mitigation, number one, because it's in between that high and the last known range high in this instance of cells. But it mitigates here. But so what does it do? It actually creates a new primary and takes liquidity. And I think that is the key as to why they're so impactful. Because when we see a deep mitigation, it means they've taken liquidity, broke on themselves, um, broke on broke on the low at least, and then are trying to create something more by creating taking out structure. So that's my interpretation of deep mitigation and why it's so impactful is because of the liquidity grab. And that is, in its simplest forms, the most impactful part of being a deep mitigation. Here we are looking at the 1 hour chart on the EU. We've had a deep mitigation. What have we had a deep mitigation of? I think it shows up on the 4 hour mostly. Scroll back. And it's a deep mitigation of a sell block. Sell primary, right? Range, initiation, break of structure. They came back in. This was the range that took liquidity and broke on itself and broke major structure, creating a sell primary. Inside this B to C leg, we had two ranges created, one here, excuse all the drawings on top of them, and the second one was here. We mitigated high up, taking liquidity effectively, and in that liquidity grab, we created a 1 hour sell primary that broke on itself, and then it's gone on to break some structure. It hasn't broken major structure, so it's not as impactful yet, but it did go off and break structure here. Price then came back in. We analyzed from the A to the C leg, and we saw this range in here. Price came back up, mitigated this range, which you would expect, and had a break of structure. we were expecting lower prices at this point. But as we know, manipulation is a real thing. And why would they want to make it easy on us? Why would they want to give us the golden goose, so to speak? So what happened was they came back in, mitigated, say 50% or more of that range, initiated away, but could not break structure this time. Now they've come up, taken liquidity from above that range, aka deep mitigation, and they're initiating away. So this is how I woke up to the screen this morning, is to see what was going on. Get rid of that right there. Back to the 1 hour. And I wake up to the screen seeing it like this, but this bar was a full candle. Okay, I saw the mitigation up here. And I wrote to myself in my notes here, deep mitigation. This looks like a deep mitigation. It's a valid range, it's broken structure. Remember, structure was, in my opinion, here. Broken structure. They came back in, mitigated it once, pulled away, break of structure. That's strength for this range. Come back in, couldn't break structure here. That's not strength for this range, but it is a stacking, a cause creation from this low to this low, right? Then we come in for the deep mitigation, and all I'm doing on my charts at that point is looking for sells. Let's go over to our lower time frame. Here's the range. Here's the range in. I've literally copied and pasted this box and this box. Okay, and now we're on a 1 minute chart. We're going to go down to 15 seconds to make this clearer. But here's our 1 minute look at what was going on. Excuse all the other drawings. Here was that high. They took liquidity from that high, and look how we've initiated away. So down to 15 seconds. What am I looking for? I'm looking for a sell primary, number one, to form. I'm looking to get in, really. I don't want to just jump in because I don't know if this is going to mitigate or not. I don't know if this can be a mitigation that pulls away, or I don't know if we're going to keep pushing up for higher prices. I have no clue. But what I do have a clue about is primary ranges and how they're formed, what they do, and how we can trade them. So I see this, a range, initiation, break of structure, comes back in, breaks structure down here, takes the liquidity, I should say, takes liquidity from above here, or from above here, mitigates here, then pulls down and away, breaking structure. What that does is activates this range in my head, activates. Now, we had another doohickey we could call here. They did the same thing again. Range, initiation, break of structure, come back in, take the liquidity from that structure, and initiate lower prices, breaking on itself. Now, why would I take this trade here? And the reason is because yes, it's formed a sell primary, but the one key element that it has not done is broken structure. We could argue that this was structure here, and it is, but this isn't where the primary formed. So there was no, and we're on a 15-second chart here. So we're looking at no structural break. However, FOMO, you could say. Also, I've seen this done before. Let's get rid of this box just for now. I've seen it done before where they actually create these and don't break structure. And so that was my thinking. Yes, we've had a deep mitigation up above here. Yes, we're pulling away. FOMO's kicked in. And I analyzed the only primary range that broke structure and ticked all the boxes, and I find this one range here. Okay, so and I had an order, not an order, I should say. I had my tool like this. I think it said 1.5 pip stop, and I wrote above it trade idea, because this is what I was thinking is where I would want to take it. But I still can't take willy-nilly. What I mean by willy-nilly is I can't take it blind, because I don't know if they're going to come and do a deep mitigation. All I know is that they're likely to mitigate something from here. So anyway, let's get into this trade first. Second, but let's talk about this one. So I've had a primary form. and a secondary primary as well, a range, initiation, break structure, that's valid, pulls up on itself, takes a liquidity and breaks on itself, valid, but not a primary. So these were actually not primaries. Why are they not primaries? Because there's no break of structure. There's no secondary break of structure. And so this actually ended up becoming cause. But you can see the logic behind why I'd want to enter here. Because if this is a primary that's formed, A to B, what happened in the B to C leg? This little guy right here. And so I got my entry at the low of here, trying to cover the high. Immediately popped within 30 seconds. I was in and out of that trade. Now, it didn't cause me too much distress because I was one other thing I want to talk about is that this was deep mitigation, so I was expecting that initiation away. So as I got that initiation away, I honestly thought this would tap into here and then just shoot back down. Because of a deep mitigation, I didn't really need to expect price to come up above here into this area. But these aren't primaries. Again, I should be really waiting for them to break structure. But I'd seen it happen before, and I chose to enter. It doesn't matter. I'm the decision maker here, and I chose to enter. I can refine this so I never ever enter into these trades. So as I observe price jumping into this range and then initiating away, let's jump to the 5 seconds. I entered on a market entry right here. It was within this candle actually, which was surprising because my stop really was here, and I that wick had not been put in on my charts, and yet it wicked up, wicked down. This was like not even 1 second. It was less than. I didn't even see it. It just printed. It didn't form. So I'm not certain how I got to stay in. It must have been timing. Potentially my entry was the only thing I can think of is I got taken in on the way back down. It had printed, it taken liquidity, and then I got as it came back down. That's when they filled me. That's the only thing I can think of. It was just luck of timing, or that this wick is just printed, and it didn't actually liquefy me. I'm not certain what happened there. I'm really not certain, but I did hang in there, and I was completely within this trade. So how did I manage the trade? The moment we had a break in structure here, I went break even. I'm still hunting buys at this point in time. Right in that second, once we broke in structure, I'm thinking to myself, I might not be safe. This trade may not be working out in my favor. Yes, this is deep mitigation. Yes, everything's ticked all the boxes. But I've been in this situation so many times now that I know I should be still looking for the buys. And I think we should totally go over to our buy side drawings now and have a look at what I'm talking about. So let's bring over my trade as well. Bring this little guy over. Okay. So 15-second chart. Here's my trade. I'm in. We're hanging in. Did not go break even at this point when this high was formed here. I stayed in until this break of structure down here. And I am looking at what's happening. So as we're forming these sell primaries, remember I took a trade here, wasn't it? No, it was here, I believe. Took another kind of trade in here. So I'm looking at what these are. And so every time we stop, I look at what it stopped at. It's a transitional, first of all, 100% transitional. What's transitional? Transitional means it goes through price and price hasn't stopped, it hasn't mitigated. And so I see it as stopped as a transitional. Transitionals always equal liquidity. However, I've noticed that price will and can react from a transitional as long as it's a primary. These, however, were sell primaries. The transitional mitigation of a sell primary occurred. If it was a buy primary, I'd be really deeply concerned. But it was a sell primary. So I'm thinking to myself, this is liquidity, but I'm not certain. And so I'm going to observe what happens because I don't know if they're going to create a buy primary from here. But I've got to see what happens here. Again, another transitional sell primary. This time I don't believe it was deep location. This was deep location. So this is giving us more weight as to what could happen, what kind of a reaction we could have. So this one was deep sell primary, this was regular sell primary, and as I'm initiating away, we get down to here, and I actually took a tiny little piece of profit off of here. I took a few units off, just to, how much was it? It was about 5%. 5% of my, let's say this is 100% order. I took about 5-10% off here. I think it was 10% actually. 10% it was. Take off 10% right here. Why? Because we're bouncing from another deep mitigation of a sell primary, and this is another transitional, yes, but it was the unwillingness to keep moving down. So I noticed this and I'm watching this on a 5 second, and I could just see how they were transacting, that they weren't going to keep pushing down here for a second. What do I mean by that? It's hard to explain, but when you're live in the market, you're getting a vibe, a feel for what's happening. And that was, in that moment, I got a feel and vibe for what's happening. It halted right above this zone as well, and this little order block in here. And again, I've seen this so many times occur that I'm skeptical that price is not just going to mitigate here and initiate high prices. So I'm always looking at what it's mitigated. Hey, it's mitigated sell primary. Hey, it's mitigated a deep mitigation of a sell primary. If that was buy primary, it could have been all over, and that would have taken price out, taken the new high, taken out the high and put in a new high. But it was a sell primary that they mitigated. They had a reaction. Again, I'm not certain if this trade's going to work out or not. I'm break even at that point, and I've taken off enough to cover commissions, and so I hold. Price works out for me, thankfully, and I see this buy primary right here. Now let's go back to our sell side drawings and expand this. 15-second chart. So we've broken structure. We were in the trade. We broke this structure. At that moment, I went BE. Here's my line, my level of BE. I'm talking about my trade management. I had a 50% off of my trade. So this is a 10-hour trade right there. I take off 50% in this area here. Why do I do that? Because we're coming into a buy primary. We're coming into a buy primary, and this buy primary is an unmitigated primary, number one. And I'm expecting a reaction. Quite honestly, with you, I don't know if we're going to go up. But where would I expect us to turn around and go up? Buy primaries. So I don't know if it's going to mitigate the open and just shoot price up. So I take off 50%. Felt good about that, actually. Felt real good about that, paying myself. I then obviously hold out for full, the rest of it comes down here. So between this line and this line, there's not much movement, but there's enough. And all in all, I take about 8 point something R. You could say I think it's like 8.3, 8.2. It doesn't really matter. 8R from a 10R trade. Traded beautifully. Really happy with it. It was a lovely trade, and in hindsight, yes, you can hold out because this looks to be the deep mitigation. So if this is going to become a deep mitigation, let's see the range that took all of this liquidity. Let's get out of replay mode. So this is what could be happening. We could be forming this sell primary. So in hindsight, I could be holding down here, break structure. If that sell primary won't activate until it breaks here anyway. So again, you could be holding out for here. But let's not forget the buy side. So on our buy side drawings here, 1 hour, I've got this buy primary fully activated, fully everything, absolutely ready to rock and roll. And in here is the range that I would expect a mitigation from and a continuation of price, taking out the highs. So we're caught between a rock and a hard place, I guess you could say, but really it's not. It's just we're caught between buys and sells. Like always, we're always caught between buys and sells. So we don't know where we're going to mitigate from, but let's look at our buy primaries. I'm back to a 15-second chart now. And this is the first thing I did this morning. I look at the ranges that have taken liquidity. Here is a buy primary that took liquidity. Range, initiation, break of structure. That creates a range. This is the range that came in, took the liquidity from beneath that range, initiated high prices, broke on itself, number one, and then broke structure, number two. So this is a check mark. This is a buy primary. Then I see the same thing happen on a lower time frame. I'm not going to go into each one, but buy primary, and they connect. Buy primary, and they connect. Do you see the connection? They're connecting. This one was interesting right here because it was a deep mitigation. And what is so interesting about this one is that we've connected from the origin, I'm going to call it origin range from the B2C leg. Here's the origin range from B2C leg, comes in here. Here's the origin B2C origin range within the B2C leg, and it connected there. This one is left unopen. Left open. Price has not come back here yet, but as they were initiating away, they did connect buy primary to buy primary. See how they connect? This one didn't connect, and I wrote this: did not connect. So I was expecting this to become liquidity, and I was thinking to myself, this would be a great place for a price to hold, wouldn't it? What did we have? We had this buy primary, and this is the from the B2C leg range. This is the last known range. And sure enough, we had a reaction out of it. Think about this on a higher time frame. If this was a 1 hour chart and we had these kinds of movements, do you think we could profit from it? Absolutely, we could profit from it. These movements, these bounces away happen on the 1 hour. These are high probability areas where we know they have to mitigate in and out of. This is why trading off of buy primaries gives us reactions, because everything is fractal on the markets, and this if it can occur on a lower time frame or a higher time frame, it copies out throughout all time frames. And so imagine this was a daily, for instance, and this was the range in here, and you'd start looking for longs. And this is the kind of mentality I want you to start thinking about. Because as price comes into these types of ranges, yes, it is just a small bounce, but on the higher time frame, it's massive in terms of pips. And they're creating something, they're always creating something. So this became liquidity. Did they take it? Oh, they haven't taken the high yet. They took this one though, range initiation. Let's clean up this chart because I'm going to show you one more, well, not one more, but I've already talked about it, but we'll just ray it out so we can show what we're interested in. This is the last known deep mitigation that initiated prices, and this is the range that I believe should have a reaction. If we analyze this range, A to B, what happened on the B to C leg? There's only one other area that price halted, and it was here. Price halted here before breaking structure on itself. Remember, this hasn't activated until here. And so as it's initiated away, they stop price here in range before initiating higher prices. So in here is something. I don't know if price will initiate away from here and use this as the bouncing point that it wants to use for higher prices. I have no clue, but it's interesting. This is a very interesting range that I've spotted. So I'm going to see how this plays out. Be very interesting to see, especially since there was a deep mitigation range that occurred here. This was the deep mitigation and initiated higher prices, and we got that aggressive initiation away. So I'd expect some sort of reaction. Will it be this much a reaction? Will it be a break structure? We don't know. So now, what are we looking for? We're looking for buys and sells. We're looking for primaries to form, lower time frame, higher time frame, and we're just observing them and how everything works out. I'm happy with my day. I'm happy with my one trade day, or two trades, I should say. I took two trades, one loss and one win, so positive 7R, and I captured a plus 8R on its own. So happy with that one. I would be looking for more trades today, but I'm not 100%. not 100% feeling 100% right now. And the other part of it is I've got a lot of other activities to do today. So for that reason, I'm going to stop trading. And for that reason, I'm cutting this video a bit short. Right now, it's 8:37 a.m. PST. Hope you guys are all smashing it. Leave me some questions, comments, anything you want me to talk about. Be happy to discuss them if my knowledge allows. And yeah, that's it. I hope you're crushing it. I hope you're making a crap ton of R. Thank you for watching, and I'll catch you again. Aloha.